Todd Rosenbluth, let's talk about your ETFs to watch in 2016. And the first one is the SJNK. This is the SPDR short-term high-yield ETF. It's been tough for high yield in 2015. What's it going to do in 2016?
Well, we think what's really appealing about this ETF is it protects against the downside of the Fed raising interest rates, which we think is going to happen later on in December and then again throughout 2016. So you get to protect the downside from the short term, but still get paid. It yields about 6%. We think that credit quality is still going to be relatively strong in 2016, and this is a low-cost, diversified way of getting exposure to high yield.
All right, let's stay in bonds. You also like the BNDX. This is the Vanguard International Bond ETF. Why do you like this one?
So again, while the Fed is going to be raising interest rates, the European Central Bank is actually trying to stimulate the economy in Europe. So this is a way, and they're buying up bonds in Europe. This is a great way to be a play on that because these hold European sovereign and government bonds, as well as some corporate bonds, and it's currency hedge. So you get the benefits of the weaker euro tied into this respective ETF. And again, a way to get diversification internationally in a low-cost way.
All right, let's talk about stocks now. You like the IJR. This is it's a small cap ETF.
Yeah.
Why do you think that the market's little guys are going to beat the big guys?
Yeah, so historically in presidential election years, and that's what we're heading into, small cap stocks have outperformed large cap stocks. And then we also have what's going on, again, with the weaker US dollar is going to hurt some of the larger cap companies. So this is, again, a low cost, diversified, very cheap way of getting exposure to US small cap companies tied to an S&P index.
All right. You also want to watch next year the XLY, which is a select sector SPDR. This is the consumer discretionary select sector SPDR. So you think people are going to be shopping?
So it's not just shopping. You know, this is consumer discretionary has media companies that are a big chunk of what it is. Other industries as well. So it's well diversified. Amazon.com is the largest holding from within this. We're expecting strong earnings in 2016 from the consumer discretionary sector. We think it's going to continue to do well, and this is the large cap companies within the S&P 500 in the consumer space.
And then finally, do you think it's going to be a volatile year next year because you are looking at the USMV, which is a minimum volatility ETF?
Yeah, so we're trying to get a flavor of all these things. If the market becomes a little bit more choppy, as we've seen in 2015, again, as the Fed is going to likely raise interest rates, this is a way to protect, again, the downside of what's happening in your portfolio. But the iShares Min-Vol product is still well diversified across various sectors. So there's sector bands. You get exposure to all the sectors, just the low-risk stocks within those U.S. sectors. And again, a very low-cost, diversified way. So all good ways to play the market, but various investment themes that we at S&P Capital IQ like.
All right. Well, thanks a lot, Todd.
Thanks, Greg.
Thank you for watching The Street.